About 62% of Americans are investing in stocks, yet only about 10% of them actually win. So what's the reason behind this? Let's take a look at the S&P 500 index. You'll see that it has nearly doubled in the past 5 years. Sounds incredible, right? That would make you think everyone is getting rich off the market. Sadly, that's not the case. The truth is, most people in the market are not making profits. They're losing money. Even worse, they're unknowingly helping the rich get richer. On Wall Street, they even have a nickname for these people. They're called capital donors because they simply hand their money to the system without any clear strategy. Currently, the wealthiest 10% of Americans hold nearly 90% of the total value of the stock market. That's not a coincidence. That is the result of different thinking, different actions, and playing the financial game by a different set of rules. In today's video, I'll walk you through the full strategy of how truly wealthy people invest, from how they start to how they protect and grow their wealth in the stock market. These aren't just tricks. This is a strategic roadmap you can apply yourself. And if you're serious about building wealth, listen closely to every part, because just by understanding and applying it, you could be among the few investors who win in any market. First, let's talk about the capital donors. Who are they? Most of these people aren't investing in the stock market, so what are they doing? They're gambling. They hear someone say stock X will go up and they buy. They see red markets on the news and they panic sell. They have no plan. They don't know why they're buying or why they should hold. And the saddest part, these people, it could be you, your coworkers, even your family, are quietly making others rich without realizing it. Are these people selling even your fault not having goals? The only thing remains are where your goals are. Simply, the only way you can get what your goals are is without realizing it. Wall Street has a name for them: capital donors. Not investors, not partners, just funders, helping those who understand the rules to earn profits. Every time you buy high and sell low, someone on the other end of that trade is smiling, not because they're smarter, but because they were more prepared. So is there a way out of being a capital donor? The answer is yes. And it's not as complicated as you might think. You don't need to be a genius. You don't need fancy tech or complex trading tricks. You just need to do one thing that most people can't: discipline. Yes, I'm talking about discipline. Only acting on what you know. If you don't know it or barely understand it, you shouldn't touch it. Pay attention to companies like Apple, Microsoft, or Coca-Cola. You don't need to check them every day. They've survived crises, market cycles, and still consistently generate profit. If you buy into businesses with solid foundations and long-term vision, you're building a passive money-printing machine for your future, not for 1 week or 1 month, but for the next 10, 20 years. And if you don't know which company to pick the entire market. ETFs and indices like the S&P 500 let you own a small piece of hundreds of major companies at once. Not because you're lazy, but because you're smart. Because you understand that sometimes winning doesn't come from speed, it comes from staying on the right path long enough. And once you've embraced the slow and steady principle, hold and let time do the work, there's another lesson I need you to deeply understand: portfolio diversification. It's not a new concept, but it is your mental and financial armor that every long-term investor must wear. Because no matter how smart or skilled you are, you can't control all market fluctuations, but you can control how you spread your risk. Think of your investment portfolio as a carriage. You can't let it rely on one single horse. If that horse collapses, whether it's tech stocks, real estate, or a specific economy, the whole carriage stops. But if you've got 3, 4, 5 horses pulling from different directions, you'll keep moving forward even if one gets injured. That's the power of diversification. Smart investors don't just bet on one sector, one country, or one type of asset. They spread across tech, healthcare, energy, and consumer goods, across domestic and international markets, between growth stocks and dividend stocks. They may hold some gold to hedge against inflation, some real estate for steady cash flow, and some ETFs for long-term stability. Every piece has a purpose in the big picture. Now take a look at your portfolio and ask, if a part of this collapsed tomorrow, would I still stand strong? If the answer is no, then now is the time to act. And remember, acting early always costs less than acting late. Once you've armed yourself with the armor of diversification and stability, the next question becomes, what should you choose? This is where we learn from how the wealthy operate. They don't throw money at hype. They don't invest based on a tweet or a clickbait headline. They invest with strategy, not emotion. You see, the average person asks, will this stock rise fast? But the wealthy ask, does this company create real value? Is the cash flow stable? Is the leadership visionary? One group gets caught in gambling, the other plays chess. Every move has a reason, a calculation. I want you to understand this deeply. Investing is a game of discipline and insight, not luck or fleeting inspiration. The wealthy pick stocks like choosing partners for a long journey, not based on looks, but on internal strength. They study financial reports, follow industry trends, and watch indicators others overlook. They look for companies undervalued by the market, but rich in recovery potential. And when they buy, they're not hoping to sell tomorrow. They are patient, they let the company grow, they let intrinsic value surface. Remember, emotion is the #1 enemy of investors. The wealthy don't let greed push them to buy at the top, and they don't let fear drive them to sell at the bottom. They know the market will rise and fall, and they prepare for both. What about you? Are you investing with calm purpose or reacting to headlines? If you truly want to go far, start thinking like a strategist. Don't buy because someone told you to. Buy because you know exactly what you're owning and why it deserves a place in your portfolio. Because in this long game, only those who understand the rules and stay consistent will win. And once you realize that picking stocks is not about sprinting, but about strategic play, the next step is something few dare to think about. Protect your money before you think about growing it. You heard me right. Most people ask, how much profit can I make? But the wealthy ask, what's the risk? And how do I reduce it? Because in the investment world, the winner isn't the one who makes the most. It's the one who survives long enough to see results. Take Mark Cuban, for example, the man who sold his company to Yahoo and received billions in stock. But instead of sitting and waiting for the stock to rise, he used a brilliant strategy: options. Specifically, he bought put options to sell his stock at a fixed price and simultaneously sold call options to offset the cost. He accepted that he wouldn't profit more if the stock soared, but in exchange, he wouldn't lose anything if the market crashed. And guess what? When the dot-com bubble burst and Yahoo plunged, Mark Cuban lost nothing. That wasn't luck, that was preparation. You see, this strategy isn't flashy. It's not as sexy as doubling your account in a week. But it's the parachute that lets you land safely when others crash. And that's real strength. Once you've learned how to preserve wealth, the next question isn't, how do I not lose, but how do I accelerate? And this is where leverage comes in. When it comes to margin, leverage, or borrowing to invest, many people get nervous. They think it's a double-edged sword, a fast track to bankruptcy. But my friend, they only see the risk because they don't understand the principle. That's why they stay away, as if avoiding a trap. But in the hands of those who know the rules, risk becomes a tool for breakthrough. I want you to imagine this. If you had a strong horse, one that knows the path, one that has crossed the finish line many times, would you dare to hitch a cart behind it to carry more? That's leverage. You don't use it on a blind horse. Just like the wealthy, they don't borrow money to gamble. They borrow to multiply calculated opportunities. They don't use margin out of emotion, but out of strategy. They don't leverage because of greed, but because they know exactly what's working. The problem isn't risk, the problem is a lack of knowledge. One person uses a sharp knife to cook, another uses it to hurt themselves. The fault isn't in the knife. And investing is the same. You don't need to avoid risk, you need to understand which risks are worth taking and which ones to avoid. Let me ask you, have you ever learned how to manage risk? Or have you only avoided it out of fear? Are you missing big opportunities just because you're not ready to go deeper? My friend, the world doesn't reward spectators, but it generously rewards those who act with clarity, not emotion. And sometimes, what others fear the most is the very thing that propels you further than anyone else. Don't let your financial dreams be swept away just because you didn't set the right priorities. Learn to defend before you attack, because you know, in chess, the loser is usually the one who fails to protect their king. And in investing, your capital is the king. And when you've gone beyond simple investing, when you no longer need to watch charts every day or stress about market swings, a new door will open. And I call that the wisdom of money. That's where the truly wealthy play. No longer a game of emotion, but a game of data, math, and high technology. At this level, investment decisions don't come from gut feelings or social media trends. They come from deep learning algorithms, quantitative analysis, billions of real-time data points, from satellite images to weather models. This is the world of hedge funds, where every trade is calculated like a space launch, not a coin flip. Have you heard of Renaissance Technologies? It's a hedge fund run by the world's top mathematicians, engineers, and coders. No ads, no noise, no media. Yet silently, they generate annual returns of up to 66% consistently for decades. A number even Warren Buffett bows to. And you know what the most amazing part is? You don't have to do anything. No timing trades, no technical analysis, no endless books and courses. All you need is to walk through the right door, invest in the right model, and trust your capital to the right team. They let the machines work while your money works for you. My friend, once you've climbed through all the mainstream layers of investing, from blue chips to ETFs to hedge funds, you'll eventually find one final door only a few can open. That's the family office, where investing is no longer about making money, but about building a lasting financial dynasty across generations. And I want you to understand this clearly, because one day you might be the one building that machine for your own family. Imagine this. Instead of figuring it all out yourself, Googling strategies, watching YouTube videos to learn investing, you have an entire team of lawyers, tax experts, real estate specialists, market analysts, and personal financial advisors, all working toward one goal: to preserve and grow your wealth for your children and grandchildren. Not on a quarterly or yearly basis, but across decades, across generations. And do you know what strategy they use to achieve this? It's called buy, borrow, die. They buy assets, never sell them, never pay taxes, and use those assets as collateral to borrow money, living off that borrowed capital. When they pass away, the assets are transferred to the next generation tax-free thanks to the step-up in basis rule. Sounds like magic, but it's 100% legal and more powerful than any investment tool you've ever heard of. And it doesn't stop there. They invest in pre-IPO companies where a single dollar can turn into thousands if the company goes public successfully. They don't wait for markets, they create markets. They don't wait for opportunity to knock, they build the door in advance. So my question to you is, are you thinking just about your life or about 3 generations after you? Because true wealth isn't about how much you have, it's about how much your family keeps when you're gone. After everything I've shared, maybe you're realizing something. Investing is not a get-rich-quick game. It's the game of keeping wealth for how long, for how many generations, and with what strategy. Because the truth is, you can earn money through luck, but keeping money always requires wisdom, and you don't need to be a millionaire to act like the wealthy. You just need to start with the mindset. They don't invest with emotion. They don't act out of fear. They don't ask, should I invest? They ask, which strategy best fits my current situation? You see, the wealthy don't wait for the market. They build systems to make the market work for them. If you're just getting started, don't worry. Every successful person once started like you. Not much money, no advisors, just a burning desire that says, I will not let others decide my financial future. And the most beautiful truth? You don't need everything. Just a plan and a beginning. So today, I want you to place your hand on the table and write down this simple sentence. I am responsible for my financial future. That's not a declaration, that's a commitment. And you'll see, when you act like you deserve financial freedom, every decision you make will change. Personal note, I used to think investing was just gambling. I lost money listening to online advice, and I know the helpless feeling of seeing your account burn red. But then I started studying how the wealthy think. They don't have more time than you, they just have more principles. And if I could change, so can you. Start with one strategy, one ETF, one small step, then stick to it. That's the end of our message today. Everything shared is just personal insight. Thank you for watching. If you have any questions, thoughts, or want to share your own experiences about the video, don't hesitate to leave a comment below. I truly look forward to your feedback and questions so we can discuss and grow together. Don't forget to like and subscribe to help spread these valuable insights.